Hey, Movie Trades! I want to do a video analysis update of the stock market. We'll talk about the S&P, as well as the Nasdaq, Apple, AMD, and Qualcomm, Nvidia, and Starbucks, Disney, the DAX, the emerging markets, and Boeing, American Airlines and John Deere, Freeport, McMoran, and Tesla, Enphase Energy and First Solar, Neo, Xpeng and Lee, Netease, the Hong Seng, and Roku, ARK, Square Cash, and Shopify, Bitcoin, Ethereum, and Solana. So, we'll start with SPY. It forms a wave 1 and a wave 2, and then it did go on a wave 3 that passed the length of wave 1, place of the wave 2 low, as was expected, and now a wave 4 is ending at the 50% retracement. So, the length of wave 1, a place of the wave 4 low, can give a wave 5 target of about the 530s. Now, we'll talk about why that could be conservative if, in fact, we do see indices get to a new all-time high. If we see SPY go to the 61.8 to 78.6% fib, in my opinion, that would support the idea that this is not a wave 3 and a wave 4. It's another wave 1 and another wave 2, and then we'd be looking for a much more substantial rally for wave 3 of wave 3 if that occurred. But I think right now, if we're above 380 and 354 would be very wide, the length of wave 1 placed at the wave 4 low can take SPY up to the 530s. We'll talk about what that could look like and why that might be conservative with QQQ. So QQQ kind of zooms out and begs the question, what if the entire rally from the March low to the high in November of 2021 is all just one wave? Well, in that situation, I think that the Nasdaq looks something like this. This is wave 1 and wave 2 from 2018, and this is a big wave 3 that occurs from the March 2020 low. This is wave 4 at the 38.2 to 50% fib, so above the 61.8% retracement of about 258, extremely tight would be 286. We need to find a wave 5 target. Now, in Elliott wave theory, wave 5 is either the length of wave 1 or the length of wave 3 placed at the wave 4 low. So if wave 5 is the length of wave 1 placed at the wave 4 low, then the Qs wouldn't make a new high for wave 5. And that's kind of one of the laws of Elliott wave theory, is that wave 5 has to break the wave 3 high. So if wave 5 isn't the length of wave 1 placed at the wave 4 low, then wave 5 could be, and probably should be, the length of wave 3 placed at the wave 4 low. And that, possibly would explain why we've seen this be the most substantial and difficult correction since March of 2020. It's because what could come from this could be similar and almost from an Elliott wave perspective replicating what occurred from March of 2020. So if wave 5 is not the length of wave 1 placed at the wave 4 low, then above 286, 258 being extremely wide, I expect wave 5 to be the length of wave 3 placed at the wave 4 low. And that in the big picture, in the long term, could set up a rally that takes the Qs up into the 500s. So that's the Nasdaq, and I think that sounds pretty crazy to a lot of people. Okay, the Nasdaq can go from 300 to 500, sure, right? And then leprechauns are going to come out. But I think if we look at other indices like the DAX, like the emerging markets, like China, even kind of some individual stocks in those names, we get that is something to be prepared for. And I think a lot of people are very prepared for the market to crash right now, and they should be, right? I'm prepared for the market to crash right now, but I don't think that it will. I think the next crash occurs somewhere between SPY being in the mid 500s and the upper 600s, right? And so if that occurs, right, the next time the market crashes, quote unquote, is when SPY is in the upper 500s, the lower 600s, then what's the best defense going to be for that crash, right? Well, there's going to be a couple of things, from an options perspective, from a holding perspective, cash positions and stuff like that. But what's really going to be the best defense for the next crash if it occurs when SPY is in the 550s, when SPY is in the 600s? Well, it's going to be buying this dip, right? Just like buying the dip that occurred in March of 2020, even up until September of 2020 was the best defense for this current correction. I expect that the next crash, quote unquote, occurs when SPY is in the mid 500s, when, possibly we're seeing that 550, 600 market tested. That could be when the next major correction occurs, when the next crash occurs. And then what's the best defense for that going to be? One of the best defenses would be saying this is a wave 1 and a wave 2 for the DAX. So the length of wave 1 placed at the wave 2 low If we're above 20, the 78.6% fib can take the DAX all the way up to 43. And that's a conservative wave 3 target from an Elliott wave perspective. Before a shallow wave 4, the retest of wave 1 high. And then if wave 5 is the length of wave 1 placed at the wave 4 low, then all in all waves 1, 2, 3, 4, and 5 can take the DAX ETF from its current levels of 25 all the way up to 53. So it's not just the Nasdaq and the S&P that could have pretty substantial upside. It's a global setup occurring, and it's a global setup that's occurred, that's possibly 10 years in the making. What's possibly going to be the best defense for the next correction if it occurs in the 550s, if it occurs in the 600s? Maybe one of the best defenses, the global markets being bought now. So that's one thing that I'm looking at is the emerging markets that, even just from this 2016 low, this is a wave 1 and an ABC wave 2. And then from the 2020 low, it's yet again a wave 1 and an ABC wave 2 at the 61.8 to 78.6% retracement. There's a good amount of stocks that are at the 61 to 78.6% retracement of their rally from the 2020 low to wherever they put in a high in 2021. And I think the emerging markets just kind of shows that a whole basket of names across the world can be setting up for wave 3. The length of wave 1 placed at the wave 2 low can take the emerging markets up to the 60s before a shallow wave 4 and a wave 5 higher. If wave 5 is the length of wave 1 placed at the wave 4 low and wave 4 retests the wave 1 high, then all in all waves 1, 2, 3, 4, and 5 can take the emerging markets from its current levels of basically 40 all the way up into the upper 80s. So it's not just the S&P, it's not just the Nasdaq. In the bigger picture, there's a couple of names. There's a long list of names in America as well that are at the 61.8 to 78.6% retracement of their rally from March of 2020 to, in the case of Starbucks, July of 2021, right? This is a wave 1 rally subdivided into 1, 2, 3, 4, 5 waves. Now we're at the 61.8 to 78.6% retracement. This is where, it's not supposed to be easy to buy this dip in Starbucks. It's not supposed to be popular, right? But the length of wave 1 placed at the wave 2 low says for not just Starbucks, but for a good amount of names, it'll be worth it. The length of wave 1 placed at the wave 2 low can take Starbucks up to the 140s to 150s for what should be a conservative wave 3 target before a shallow wave 4 and a wave 5 higher. I like Starbucks above 66. I'm just going to keep holding Starbucks for a while to my dividend growth holding. So I'm growing that farm, but I think that Starbucks is kind of another piece of evidence that this is the entire holistic market rally. Very similar to the emerging markets, very similar to the DAX. It's a major name at the 61.8 to 78.6% retracement of the 2020 rally. Another major name at the 61.8 to 78.6% retracement of the 2020 rally is Disney. I don't ever think it's a coincidence that we get Disney at the, big focal point of political media nonsense when it's at the 61.8 to 78.6% fib. Okay, this is a wave 1 and a wave 2, just like Starbucks from the 2020 low. This is not the time to get political about Disney. To me, this is a 61.8 to 78.6% fib. I didn't really think we'd get all the way to the 78.6% retracement, but the wave 1 invalidation is 79. The length of wave 1 placed at the wave 2 low says, honestly, the 230s is a very conservative wave 3 target because a lot of times the 161.8% extension of wave 1, i.e. wave 3, is bigger than wave 1. So the length of wave 1 placed at the wave 2 low gives a conservative wave 3 target of 230. Before a shallow wave 4 and a wave 5 higher, if wave 4 retests the wave 1 high and wave 5 is the length of wave 1 placed at the wave 4 low, then all in all, Disney is setting up for a rally to the lower 300s, right? The 320s. And if we look at the big picture, in my opinion, that would be as part of a wave 1 and a wave 2. So this huge wave 3 that takes Disney up to the 230s before a shallow wave 4 and a wave 5 higher up into the 320s, in my opinion, that just ends this wave 3 in the big picture. This is wave 1 and wave 2. Wave 3 ends in the 320s, right? So that wouldn't even be the end for Disney, right? And this is something that, these opportunities are rare. For growth stocks, these kind of happen on a regular basis. But for a blue chip, right? Like Disney, like Starbucks, you don't get 61.8 to 78.6% retracements of 1 year rallies too often, right? And for the DAX, for Disney, for Starbucks, for the emerging markets, you know, that's just 4, where we're at the 61.8 to 78.6% retracement of the rally that occurred in 2020. And the kind of Elliott wave expectation is that 2020's rally was wave 1. This correction that a lot of stocks have seen since mid to late 2021 is wave 2. Now we can be setting up for wave 3. If, of course, we can see what the Apple chart looks like. I like doing these videos during the day, but sometimes my computer doesn't. We'll see if we have any of these loading. Here's AMD. AMD is another one that gives a low to trade against at least. Now, some of these tech stocks were losing lows to trade against. I think AMD still is a pretty good one, where this, from this low, is a wave 1 and a wave 2 that is subdivided into 5 waves, an identical setup to AMD last year, where it was all over the bar chart, straddle and triangle screener. It had, you know, a little bit more downside and then exploded, right? Bag holder, bag holder, bag holder, explosion for wave 1. I think it's a very similar phenomenon going on right now. This is wave 1 and wave 2. We've seen the institutions loading up straddles and strangles on AMD. And I think right now they're hedging for a massive move. And I think that they're expecting that move is going to be to the upside. I think this is wave 1 and wave 2 for AMD. The length of wave 1 placed at the wave 2 low can take it all the way to a new high. But that wouldn't be where wave 3 stops. Usually wave 3 is a lot bigger than the length of wave 1 placed at the wave 2 low. So wave 3 ending up at 176 is pretty conservative. Even if we have a shallow wave 4 that retests the wave 1 high, and wave 5 is the length of wave 1 placed at the wave 4 low, then all in all, there's the possibility that the length of wave 1 placed at the wave 4 low could take AMD up to the 250s in the big picture for waves 1, 2, 3, 4, and 5. And that's all very valid if we're above 72.50. So I think AMD is one of the tech stocks that really gives a nice low to trade against. It's a little far away from the current levels. I think another one in that group is Qualcomm. Qualcomm forms a wave 1 and a wave 2, has this big wave 3, and ends wave 4 at the 38.2 to 50% fib. And then from this low, it forms a wave 1 and ends wave 2 at the 78.6% fib. So just like AMD above 72, I think Qualcomm above 122 gives a great level to say this is wave 1 and wave 2. The minimum wave 3 target, kind of the silly wave 3 target, is that it's the length of wave 1 placed at the wave 2 low. And I say that's kind of a silly wave 3 target because a lot of times wave 3 is the 161.8% extension, i.e. wave 3 is bigger than the length of wave 1 placed at the wave 4 low. If wave 5 is the length of wave 1 placed at the wave 4 low, wave 3 is bigger than the length of wave 1 placed at the wave 2 low, it's followed by a shallow wave 4 that retests the wave 1 high. Then wave 5 is the length of wave 1 placed at the wave 4 low. So all in all, if Qualcomm is above 122, very similar to AMD being above 72, the length of wave 1 placed at the wave 4 low says that for waves 1, 2, 3, 4, and 5, we can see Qualcomm go up to the 250s. So I think that Qualcomm and AMD, they give kind of clean levels. I really like the low that Enphase Energy continues to give, and kind of that semi-related name. So let's see if we can get Apple to load. Here we go. I think Apple from this low that occurred in September of 2020, we have a wave 1 and a wave 2. Then we have this big wave 3 and a wave 4 at the 50% retracement. Now, as of this video, we haven't gone below 150. There's a few stocks where I could literally end the video and upload it, and by the time I've uploaded it, a level's been broken or a level hasn't. Okay, sometimes it does come down to 1 or 2 levels just for a particular stock. That's why I analyze stocks as a whole. That's why I group stocks together in the kind of based on their sector ETF allocations. So I never just have one level, right? For a lot of people, you know, their SPY level's been hit. Now they're calling for 1929. All right, that's what happens when you just stare at SPY. You don't see that John Deere and AstraZeneca and Walmart and however many XYZ healthcare and, you know, consumer stocks have hit all-time highs, right? That doesn't even really register in your analysis. If you're just staring at SPY, you got one chart, you got one count, and once one level goes, all of a sudden you've completely flipped your bias. You've just gone from I'm calling for the moon to sell everything, you know, I'm in a bunker, you know, and I'm not saying that doesn't work. I'm just saying that creates a lot of taxable events. For Apple, this is a wave 1 and a wave 2. This is a wave 3 and a wave 4 at the 50% retracement. Now, if Apple did go into the 140s, between 149 and 130 is the 50 to 78.6% retracement of the rally from March of 2021, this high that was put in early January. So in that case, there would still be the possibility that this is another wave 1 and another wave 2. Right now, I like Apple above 141 to say that that's a wave 4 that is either already ended or is ending. Then the length of wave 3 placed at the wave 4 low gives a wave 5 target of about 215, 216 for Apple. So that's Apple, that's AMD, that's Qualcomm, and that's Nvidia. So Nvidia doesn't really have a great level to trade against. It's kind of similar to QQQ, where we're zooming out to this kind of count that occurred from the 2018 low. But I think it looks something like this. No matter where the wave 1 begins, it's very similar to QQQ, where if you took the length of wave 1 and you placed it at the wave 4 low, Nvidia wouldn't make a new high for wave 5. Wave 5 has to make a new high. So it's Elliott wave theory. If I'm theorizing that there's going to be a wave 5, it's not going to be the length of wave 1 placed at the wave 4 low. I expect then it will be the length of wave 3 placed at the wave 4 low. That can take Nvidia up to 400. So I think this is a wave 1 and a wave 2. I think this is a big wave 3, and the 61.8 to 78.6% retracement is ending a deep wave 4. Now, a lot of Elliott wave theorists are going to say, since when does wave 4 end at the 61.8 to 78.6% retracement? And that's a good point. Usually, when a stock goes all the way down to the 61.8 to 78.6% retracement, we're not talking about a wave 4 ending. We're talking about another wave 1 and another wave 2, or maybe to be a little more simple, that this is all wave 1 and wave 2. So the implication of that would be that everything that I've just said about Nvidia possibly going to the 400s would be a little conservative. I'm not trying to say anything beyond Nvidia going to the 400s, but I do just kind of want to point out that there is the possibility that since this is a deeper 61.8 to 78.6% fib, that, you know, we could be looking at a bigger rally than what would occur from a wave 5, and that would also kind of explain why it's been a little more deeper and difficult than what I usually call the wimpy wave 4. We've got the very scary kind of wave 2 look with Nvidia between the 61.8 to 78.6% fib. But I think in either way, we're looking for the length of this rally at least to be replicated for wave 5 or for wave 3 and wave 3. So I think this is wave 1 and wave 2. I think this is wave 3 and wave 4. The length of wave 3 placed at the wave 4 low can take Nvidia up to 400. If this is a wave 1 and a wave 2, and this is another wave 1 and another wave 2, or, you know, this is all just wave 1 and wave 2, we're still looking for, you know, when it all plays out, Nvidia to get up to the 400. So that's in the big picture. I don't think that's going to happen tomorrow. For the downside, the 78.6% fib of 165 is a great level. And I think that also coincides very closely with this wave 1 high of 153. So 153 to 165 is a great level for Nvidia to be above. I think an even better level comes from AMD and Qualcomm and kind of the holistic semiconductor look. And I think also I'll throw in Enphase Energy, which I'm about to discuss, holding its wave 2 low as well. But I think this is wave 1 and wave 2. This is wave 3. Wave 4 retest the wave 1 high. So in what doesn't sound conservative, but what I think is the length of wave 3 placed at the wave 4 low gives a wave 5 target for Nvidia in the big picture, damn near 400. Now it sounds crazy, but you know, it wouldn't be the first time that, you know, I've predicted Nvidia nearly more than doubling, nearly tripling in this channel. And there's a couple stocks that fit that description. Nvidia, you know, they said silly things about Nvidia back in May of 2021. Similar things about Microsoft, similar things about Apple, similar things about the Nasdaq. Okay, I was told that, you know, that the Nasdaq setup that had Nvidia and, you know, AMD and Microsoft and all these big tech stocks, it had failed for a month in May of 2021. Okay, this one's failed for a little more than a month, but I think that we're going to see a very similar outcome where this is quite a rare opportunity. And it's not just a rare opportunity when you look at Nvidia, it's a rare opportunity when you look at a whole lot of stocks. A whole lot of stocks at the 61.8 to 78.6% fib, a whole lot of indices at the 61.8 to 78.6% fib. That doesn't mean I'm going all in. That doesn't mean that I'm selling my hedges, which I'm certainly never going to do. But it does mean that when I see, people talking about, it was just trending on Twitter, I'm going to liquidate my 401k. Everyone was blaming Biden for their 401ks. Don't blame Joe Biden for your 401ks, fam. I think ultimately Biden's going to be good for the 401ks. That's just me. But I don't think it's a Biden thing. I think it's a global thing. I think it's a very global thing going on. Anyway, I'm getting on a little bit of a tangent. But I saw yesterday that Jim Jordan tweeted about my 401k, Mrs. Trump. I don't think the 401ks, at least as far as Germany goes, at least as far as, maybe China goes, at least as far as, a lot of the emerging markets go, I don't think they're going to be missing anyone anytime soon. And I think if we look at the global markets, we might see something that, really we haven't seen in any recent president's lifetime. Because what we see when we get the Hang Seng, also at the 61.8% retracement of the rally from 2008 to, 2018, where this is a 10-year rally. And maybe this is something that we got to thank a future president for, or a current president for, that China is about to explode into a 10-year bull market, in my opinion. Because this is a wave one from 2018 to from 2008 to 2018, this is wave one for the Hang Seng, and I think this is wave two at the 61.8% fib. So I think this is wave one and wave two. The length of wave one placed at the wave two low of above about 15.5K can take the Hang Seng up to 40,000, right, for just a red wave three target before a shallow wave four and a wave five higher. If wave four retests the wave one high and wave five is the length of wave one placed at the wave four low, then we can see the Hang Seng go up to 55K for waves 1, 2, 3, 4, and 5 from the 2008 low. And in my opinion, that would just complete a wave 3. So what I guess I was trying to say with the joke about, I saw the stock market crash was trending on Twitter. People are tweeting about, Jim Jordan and their 401ks, missing Trump. I do think it's a little interesting that now we have this kind of global, where the kid at the bus stop is now noticing that the stock market is down. I think that's kind of a good thing, where if you just kind of talk to one of your friends, one of your normie friends, they're not, they probably hadn't even been too aware that the stock market was down. But then in recent weeks, it's really coming to mainstream focus. That might be supporting the, opportunity aspect of it, that now a lot of people are real scared. But I think if we look at the emerging markets, if we look at the DAX, if we look at a lot of companies, we see this really being a huge opportunity for the indices. If we look at Boeing, we see this possibly being a big opportunity in a whole sector, a whole sector that the world needs to run on. For Boeing, there's this idea that this is all wave one, kind of very similar to Disney, where you have a 1, 2, 3, 4, 5 waves impulse from the all-time chart. Right, so this opportunity isn't supposed to be easy for Boeing, right? It's not supposed to be easy to catch a super cycle low in transportation, right? But what we're essentially talking about is the idea that this is a winner that could run, for not just one person's lifetime, but possibly another person's lifetime, possibly, a grandchild's lifetime, possibly a great-grandkid's lifetime, where this is all wave one and this is wave two. And then from this low, Boeing forms another wave one and another wave two at the 61.8 to 78.6% fib. So 89 is a pretty wide invalidation, especially from the original levels that I've been talking about Boeing. But I do think this is wave one and wave two, and Boeing's heading up to the 161.8% extension of 392 for wave three before a shallow wave four and a wave five higher. And I think that this is kind of just very similar to the emerging markets, very similar to, the DAX, even the Nasdaq itself, and, AMD, where you do get the idea that this could certainly be a huge opportunity, right? This could be the worst time that, People are looking at their 401ks. They're looking at SPY below 400. They see QQQ below 300. Everyone's telling them why. It's because we're raising rates, right? I'm going to push that sell button. Oop. Oh, no. Oh, no, right? It could happen. It could happen where they're just trying to get everyone to push that sell button. Hey, go log into that, thing you're not supposed to log into and push that button you're not supposed to push. And then right when they do, wave 1, wave 2, oh, snap. Right? Wave 1, wave 2, oh, snap. Wave 1, wave 2, up. Starbucks, it was another dip that should have been bought for Starbucks, right? In hindsight, it's going to be obvious to say, oh, yeah, of course, when Disney dips, you buy it. Duh. It's Disney, right? Duh, right? I just read about Disney in my Substack. Duh. When the Nasdaq dips to the 38.2% retracement, you ate, right? It's easy money. Right, that's what they're gonna say at all-time highs, but it's not easy to say now. I think now we're kind of even seeing the media is kind of really pushing this. Hey, why don't you go look at your 401k? It's Joe Biden's fault, right? It's Joe Biden's fault. I don't think it's Joe Biden's fault. We need to ask all those people who bought all those options on those oil stocks what they thought about markets in December. But anyway, this is the wave 1 and wave 2 for American Airlines, right? And this is another 10-year bull market. What do you know? Another 10-year bull market for wave 1, right? Just kind of like the Hong Seng from 2008 to 2018, wave 1. Oh, it's a fad. Airplanes are a fad, right? Wave 2. And then what could we be entering? A wave 3 that's bigger than the length of wave 1, right? So this is why, we'll talk about some of the inflation stocks. I'm not going to, get all too into that. But actions and inactions have consequences alike. And I think this is one where, it could be a big deal, right? This could be a lot bigger than what's going on in the news tomorrow or yesterday. This is a 10-year wave 1, right? Just think about 10 years. What was going on? What was the fashion like 10 years ago, right? Were we still wearing jorts? Just 10 years is a long time. 10 years is a long time. I don't remember what was on the news, in May of 2012. I'm going to guess. I don't know. I really don't know. But I think this is a wave 1 and a wave 2 for American Airlines. And this could be a big thing coming. It could take a long time, sure, or it couldn't. The options market, certainly expecting that the airlines like Boeing, American Airlines, and JetBlue are going to have a monster move. If we go to options and look at the long straddle, long strangle screener, which I basically do 24/7. But this is a wave 1 and a wave 2 for American Airlines. And in my opinion, this is a 10-year wave 1 that will get replicated for wave 3. And wave 3 is bigger, stronger, and faster than this wave 1. That, by the way, went from 1.45 to 59. Right? So I can't even do that percentage in my head. Thousands of percent, gain for wave 1. Wave 3 is bigger than wave 1. Wave 3 is a lot more important than wave 1. And for a stock like American Airlines, there's a little bit of a margin of safety where, for me, I don't really feel like I'm holding American Airlines and it's something that could go to zero, right? And it could, but, compared to a growth stock, a stock that IPO'd 5 minutes ago, I think that we've got a little room against zero for American Airlines. I think this is wave 1 and wave 2. I think from this low, this is another wave 1 and another wave 2. So above 12, the 161.8% extension says that American Airlines going to 37. When you zoom out to the big chart, that's just kind of a stop, right? That's not the end of the road. That's not, where hell comes. That's just where we look for a shallow wave 4 and a wave 5 higher. So I think American Airlines, I think Boeing, the reason I want to include them was with Starbucks, with Disney, with the emerging markets, they all kind of support a pretty opportunistic message. And I think if we look at John Deere, I want to include some of the inflation-related stocks that made new all-time highs. I'm going to leave AstraZeneca and Walmart out of this one. But I think for John Deere, this is a wave 1, a wave 2, a wave 3, and a wave 4. What I wanted to focus on for John Deere and for FCX Freeport McMoran, which I'm about to go over. From this low, John Deere forms a wave 1 and a wave 2 at the 61.8% retracement. So I think one thing that's a little interesting, especially when you look at what's gone on for the past 3 or 4 months, is that used to, early in the first quarter, we'd have SPY be down, but we'd have the whole oil sector be up, or we'd have all the precious metals be up, or we'd have a couple of very, inflation-related names like John Deere be up, right? So it was like the Nasdaq was down, but XLE is up. The Nasdaq is down, but, GDX, GDXJ, and all the uranium stocks are up. And what's happened more recently is that now they've kind of all started moving back together. I think that when we look at, we're not going to go over the oil stocks in this video. When we look at John Deere, you look at, some of the stocks that were kind of the inflation stocks, kind of the war stocks, so to speak, that formed wave 1 and have joined this wave 2 sell-off. They're now kind of evidence that, wait a minute, if John Deere is about to begin wave 3, is the market going to go with it? And I think it will. I think this is a wave 1 and a wave 2 for John Deere. So wave 3 is the 161.8% extension, which is about 522, 523, before shallow wave 4 and a wave 5 higher. That's all very valid above 320. So I am expecting John Deere to have a pretty substantial reaction from the 61.8 to 78.6% retracement, go make a new all-time high. And it'd be pretty surprising if John Deere did that and the market didn't turn around. So there's a little bit of holistic analysis. And one thing I haven't seen in the past, 3, 4, 5 weeks, I haven't seen any charts of any of these stocks in the healthcare sector, in the industrial sector, in the metals and mining sector that have gone on and made new highs, and now they're kind of back testing that high, so to speak. But, if we didn't really make a big deal about the breakout, we're not really going to make a big deal about the back test. And if we're calling a lot of these failed breakdowns, classical traders will always call what we call wave 2, right, the fake down. So they all, they kind of get on they kind of get spun around a little bit, right? Because this is the breakout. No, it's a fake out. So now we're going to, no, this is wave 1 and wave 2. So wave 3 is this. Anyway, let's look at FCX. I haven't talked too much about this chart, but it's a massive metal mining stock. It puts in an all-time, it's not exactly a silver miner, but it's in the mining sector. Anyway, from the 2000 low, right? Very interesting, by the way. We always get this message that we're sent that from 2000 to 2008, anyone who owned assets just got completely wrecked, right? And if you actually go look at the charts, there are several sectors from 2000 to 2008 that do very well. So for me, when I look at the 2000s, I wasn't, day trading back in the 2000s, but there were a lot of sectors besides, SPY that did pretty damn well. And I think, just going off my memory, XLE is one of them that makes, a new high pretty quickly into the decade. I think a lot of the gold and silver miners, I think even some of the industrial names. But look at this, FCX. What was that bear market we were talking about? If someone was diversified from 2000 to 2008, they did pretty damn well. So that's, I think that the 2000s is, we always get that as kind of a bear porn message, like, oh, the 2000s could happen. For me, I'm like, oh, the 2000s could happen, so all the metal miners are going to quintuple. Anyway, FCX forms a wave 1 and a wave 2 on the all-time chart. And I think from this low, this is another wave 1 and another wave 2. This is wave 3 and wave 4. So I want to focus on is from this low, very similar to John Deere. I think FCX forms a wave 1 and ends wave 2 at the 61.8 to 78.6% fib. It's getting ready for a wave 3 to the 161.8% extension of wave 1, which will be a new all-time high of 65. So I also kind of wanted to throw this one in, right? Because it's kind of like a few charts that I've gone over that I've kind of mentioned, where we talk about the idea that the foreign markets are going to explode, and everyone thinks, yes, like that's going to be great for the e-commerce stocks like Fiverr and Alibaba. And I think that's true. But unfortunately, the foreign markets exploding is also going to be good for a lot of inflation-related stocks like FCX, but also like, some oil stocks like Petrobras. And I think it's pretty cool that we're seeing, the average Joe becoming an economist now over some of these gas prices and stuff. And I'm here to say I don't think gas prices are going away. One thing I wanted to mention by including FCX, by, just briefly talking about Petrobras, is that, this isn't going to be a fun rally for people with bills if it occurs. I think what occurs in the emerging markets, what occurs in the DAX, what occurs in Starbucks and Disney and Boeing and American Airlines and, all the stocks that I just went over, what occurs in those names is not going to be fun for people with bills. It's very easy to say, someone's just a cheerleader, right? They're just cheering for the emerging markets to go to the 80s. They're just cheering for the DAX to double. They're just cheering for, Boeing and American Airlines to explode. It's more about preparation. It's more about acknowledging that if we go see a oil stock like Petrobras, which is, I think, an 8% holding of EWZ, the Brazil ETF, we go see a stock like this, go to the 161.8% extension from 13.50 to 27, then oil is going to do very well. We go see a stock like First Majestic Silver in the silver mining sector. I think this is a Canadian stock. We go see a stock like this go from the lower bound of the pitchfork to the median. It's not going to be fun. I think that this is eventually what's going to happen for AG, where this is a wave 1 and a wave 2 at the 61.8 to 78.6% retracement. So I'm going to keep holding AG, but I think that this one is going to go to the median of this pitchfork as well. And that, very similar to Petrobras, very similar to Freeport, McMoran, is going to be not very fun for people with bills, for people with, for me, right? It's not going to be fun. And I think that, a lot of this rally that occurs, I've made a lot of comparisons to what happens from the 2008-2009 low in the American indices. But I think one of the big differences is that this time, the metals and the miners, the inflation-related names, they're going to join the rally. So I didn't want to, I didn't mean to get on too much of a tangent right there. But anyway, I think Freeport, McMoran, FCX is just kind of a reminder that we have inflation-related names in this market, like John Deere, and I think they formed wave 1 and wave 2 from the lows that they formed recently. If I can get this to load, and then we'll enter a wave 3. So here is Tesla. I think the Tesla forms a wave 1 and a wave 2 in the big picture. I think all that really matters for Tesla is that from this low, this is another wave 1 and a wave 2 that ends at the 61.8% retracement. So I think this is wave 1 and wave 2. Now, Tesla, they're making it a little difficult. We're getting close to 700. We're getting close to 690. So Tesla can get pretty volatile below 700 to 690. So I'll make that clear. If Tesla does go below 700, then wave 2 hasn't ended. Below 690 to 700, there is downside risk for Tesla. So I'll talk about why I think it's really important to include Enphase Energy in the analysis of Tesla. But I think this is wave 1 and wave 2. I think right now we're above 700. So from this low, this is a wave 1 and wave 2. And we can see Tesla get very explosive into wave 3 of wave 3. Now, I will say original Tesla entries were way down here in the 150s, the stock splits ago, right? And that's a very similar thing with Bitcoin where, as far as this channel is concerned, they're up about 400, 500% from original levels. But I think for Tesla, this is wave 1 and wave 2. If we hold above 700 to 690, wave 2 has already ended. Now, the widest invalidation is this wave 1 low of 539. That would be quite the retracement. But I think this is a wave 1 and wave 2. 690 is a tight stop. I think 539 is a wide invalidation. And we can see Tesla begin wave 3 of wave 3. I want to say, if we kind of zoom in on this, this could be wave 1 and wave 2 forming from this low. And then that would be quite the explosive path past the 1400s for wave 3. So if wave 1 is the length of wave, if wave 3 is the length of wave 1 placed at the wave 2 low of 1400, and it has a shallow wave 4 and a wave 5 higher, all in all waves 1, 2, 3, 4, and 5 can take Tesla up to the 1900s in the big picture. Now for 1900, I think 539 is the wide invalidation that would be appropriate for that. I think for, a little tighter, 690 to 700 says that wave 2 is already in, and we can enter wave 3 or wave 3. The length of wave 1 placed at the wave 2 low says a conservative wave 3 target is 1400 before a shallow wave 4 and a wave 5 higher. I'll talk about why I think Enphase Energy is a very important chart for Tesla bulls that I'm going to be using to kind of look at the clean energy sector as a whole. So this isn't just some random stock. This is about 8 or 9%, an 8 or 9% holding of most clean energy ETFs. And when I say most, I mean ICLN and TAN. I think QCLN, which is also with Tesla and Tesla and NEO, Enphase Energy is a big holding of that. So as Enphase goes, so goes clean energy. I think that's a pretty fair statement. And I think for Enphase, this is a wave 1 and a wave 2. I predicted within this wave 1, this big wave 3 explosion, I think this is a wave 1 and a wave 2 that retested that low. So the tighter level would be 113. The wider level would be 108. They're pretty close together. But I think from that low, from this wave 2 low about 113, Enphase Energy forms wave 1 and wave 2. So this is the 61.8 to 78.6% retracement of a pretty short-term wave 1 rally. So if this is wave 1 and wave 2, then wave 3 could get explosive. And when I talked about the idea that if Tesla's above 690 to 700, it's within wave 3 of wave 3. That's a very similar look that we get with Enphase Energy, where, you know, it could get pretty fast if we see Enphase Energy turn around between the 61.8 to 78.6% fib. It'd be a pretty fast route to the 161.8% extension, which is up there in the 280s before a shallow wave 4 and a wave up higher. In the big picture, that'd be wave 1 and wave 2. Wave 3 is at least the length of wave 1 placed at the wave 2 low. But even if we have a shallow wave 4 that retests the wave 1 high, wave 5 is the length of wave 1 placed at the wave 4 low. So I think above 113, there's ultimately a path that takes Enphase Energy up into the mid 400s. So I think Enphase is a great setup, but I also think it's a huge piece of evidence for a lot of clean energy stocks like First Solar. I think First Solar forms wave 1 and wave 2. I think this is another wave 1 and another wave 2. And I think that this kind of chart is pretty important to understand why the long-term counts are kind of important, because we're not really, when you look at the idea that this is a 10-year, 1-decade base, it kind of seems silly to think about the news headlines that we're talking about on a day-to-day basis. This is a base that took 10 years to form. Very similar to how this is a base that took 10 years to form. Now, classical traders are going to say this was the fake out, failed breakdown, from failed moves come fast moves, so EEM's going to 20, right? But from an Elliott Wave perspective, this isn't a breakout and back test and a failed move. It's a wave 1 and a wave 2 where we can see an explosive wave 3 of wave 3 of a 10-year nest, right? This is a 10-year base that's formed. And from an Elliott Wave perspective, we kind of get the idea that we know that the breakout eventually will be successful. Not just for EM, but I think for First Solar as well. This is wave 1 and wave 2. This is another wave 1 and another wave 2. And yes, this is another wave 1 and another wave 2 above the 78.6% fib of 48, which is getting a little wide. I think this is wave 1 and wave 2. We can see FSLR enter a wave 3 of wave 3 up to the 180s before a shallow wave 4 that retests the wave 1 high. And then wave 5 is the length of wave 1 placed at the wave 4 low. All in all, FSLR can go up to the 200s. I think FSLR getting to 216 would just end this black wave 3 from this low. So from this low, this is wave 1 and wave 2. And then all the way up in the 200s is when wave 3 would end before a shallow wave 4 and a wave 5 higher. So it's, again, you know, I'm not sure how much I'd use this with Tesla, but I think it goes into the category of evidence for a lot of clean energy stocks that if First Solar could be in the 200s, you know, it kind of, you know, begs the imagination to ask where some of these other smaller cap clean energy names might be. I think the Chinese stocks like NEO and Xpeng and Li certainly fit into that category. I think before we talk about them, we should talk about the Hong Seng. The Hong Seng, like I said, is a 10-year wave 1 and a wave 2, right? So this is supposed to be a big deal. It's not supposed to be an easy thing that everyone's, you know, real excited to catch. You know, this is where people are looking at the market sell off for the first time in normie land, and they're seeing SPY below 400. They're seeing QQQ below 300. You know, they're seeing, you know, all the Republicans blaming the Democrats for it, saying this is why. I love that I'm hearing everyone say, oh, this is why it's going to happen. It's because of rising rates. It's because of rising rates that the market will crash. And that's why I'm going to make lots of money on my puts. It's like, okay, I wish it were that easy. And I'm very happy if that works out for some people. I don't think that's going to work out for a lot of people. I think they're selling people real expensive puts with SPY having 100% implied fee ranking percentile. And I think looking back, they're kind of going to laugh that during hyperinflation, they gave us Disney at the 61.8% retracement. They gave us Starbucks at the 61.8% retracement. They gave us the DAX. They gave us the emerging markets. They gave us, all the growth stocks that we're about to go over. And they gave us the Hong Seng, China, the whole country. Wave 1, Wave 2 at the 61.8% retracement. They're setting up to make fun of us that we all got super bearish before Wave 3 was the length of Wave 1 placed at the Wave 2 low, taking the Hong Seng up to 40K in the big picture. Before a shallow Wave 4 and a Wave 5 higher. When we're at, the 40K range and we're looking back, is anyone going to remember the headlines that we were talking about? Probably not. But I think the Hong Seng, one thing I wanted to include with it, with Netease, is that for China in general, this is Wave 1 and Wave 2, 15.5K would be a pretty wide invalidation. But we are at the 61.8% retracement right now of the 2008 to 2018 rally for China. We are where the length of Wave A placed at the Wave B high is where Wave C ends. This is not where it's supposed to be really easy to say, hey, I'm a China bull, a bull in a China cabinet, whatever. I think that we're going to see the bull in the China cabinet come to life. This is Wave 1 and Wave 2 at the 61.8% retracement. Wave 3 connect the Hong Seng to double its current prices in the big picture. Before a shallow Wave 4 that retests the Wave 1 high, and then Wave 5 is the length of Wave 1 placed at the Wave 4 low. If the Hong Seng can go to 55K, and that could just end Wave 3 within the cycle from 2008, right? Maybe, more about to talk about what NIO, Xpeng, and Lee isn't as crazy as it sounds. So for NIO, we don't really have a great low to trade against right now. There really is no level to trade against. This Wave 1 high right here is 5.65, right? We're basically retesting the IPO high of 13.80. So I do think the IPO high was a Wave 1 and a Wave 2. I think from this low, NIO forms a Wave 1 and a Wave 2, and it's ending an ABC correction where the length of Wave A placed the Wave B high is where Wave C ends at the 78.6% fib. So, like I said, there's no low to trade NIO against. What some wave theorists will say is wait for a Wave 1 to form, buy the Wave 2 against the low during the retest, and then get in for Wave 3 or Wave 3. That's one possibility. For me, I went over a lot of the straddles that I'm using to manage downside risk, and one of them was on ICLN specifically because I'm interested in a lot of the smaller cap growth stocks in the clean energy sector specifically. NIO, Xpeng, and Lee certainly falling into that category. So that's kind of how I'm managing downside risk, is with straddles on ICLN that I've shared. But I do think this is Wave 1 and Wave 2 at the 78.6% fib. The length of Wave 1 placed at the Wave 2 low. If we ever did see a Wave 2 low form, which I think we will, could take NIO up into the upper 70s, right? That's just replicating this Wave 1 rally. So remember that all my price targets, they're just coming from the lengths of moves that have already occurred. In wave theory, Wave 1 is the measuring stick. It gives you the conservative Wave 3 target. And then from there, there's the shallow Wave 4 that retests the Wave 1 high. And then you get a conservative Wave 5 target, or actually kind of a good Wave 5 target, being the length of Wave 1 placed at the Wave 4 low. So what's the evidence with NIO? For me, I think this is a pretty clear 5 waves impulse. 1, 2, 3, 4, 5 waves. And I think this is a big Wave 1. Now we're at the 78.6% retracement. You can't really call this Wave 3 and Wave 4. Really, you're either calling for NIO to go to 0 and go bankrupt, or you're saying this is Wave 1 and Wave 2, the 78.6% fib. The length of Wave 1 placed at the Wave 2 low can take it to the upper 70s before a shallow Wave 4 that retests the Wave 1 high, and then a Wave 5 is the length of Wave 1 placed at the Wave 4 low. In the big picture, there's a path where we just add a 0 to NIO's current value. There are stocks that go up 1,000%, and they're not easy. I remember one time I posted about Mara. I'm not trying to brag about Mara or anything, but one time I posted about Mara, and someone said, imagine owning Mara when it was at 25 cents, right? And the thing is that there are stocks that are opportunities like that where, there's something ridiculous that comes from a big dip. And I think NIO, I think ROKU, I think a lot of the ARK holdings we're about to go over, they are kind of, you're supposed to sound silly saying what the reality could play out to be. If this is Wave 1 and Wave 2, NIO could be, you know, in a long list of stocks in the kind of growth Cathie Wood-ish sector that are huge opportunities. So just with NIO, there's no low to trade against, but the length of wave one placed at the wave 2 low says there's a lot of reward. So the risk can be defined for me. I'm using downside risk management for a lot of growth with the straddles I have on ICLN. They got pretty bloated recently, so I've got, you know, nice hedges to buy against. But I think this is wave one and wave two. You know, wave three in the big picture can take NIO to the 70s and to the 80s, and that would even be conservative. What some will say is wait for wave one to form, buy the wave two, and then ride wave three. Wave three, I'll certainly be covering NIO if that happens. So that's NIO. Here's XPEV. I think XPEV is a little similar to NIO, where we're just getting pretty damn tight. I'm going to hold XPEV forever. I am a retail bag holder. I bought XPEV at 29 in one of these dips. And then I just kept holding it. So I'm looking for a new all-time high for XPEV. I think this is wave one and wave two. I took a half position size in XPEV, so it didn't really make sense for me to sell it up in the 50s because when I take a half position size, I really need kind of, you know, the big one to play out. So I take half position size with growth as I do value. So that was one reason why I didn't take gains on XPEV and Lee when I had them. But I do think this is wave one and wave two for XPEV and Lee. I think this is an IPO base. So this is the real reason I didn't sell XPEV and Lee is I think that selling in the 50s, I would have sold myself short. I think this is wave one and ABC wave two. For XPEV, it's getting pretty tight, but above 17, we put in the IPO low. Now, sometimes the IPO low does go and it's still wave one and wave two. So I'm going to hold these for forever, just to be honest. And if we talk about Netease and the Hong Seng, that kind of helps to explain why, right? If I think the Hong Seng is going to go to 40K, 55K in the long term, you know, double its current levels, you know, XPEV would probably be doing, probably be a good one to hold during that time. I think this is wave one and wave two, and this could be an IPO base that eventually takes XPEV well beyond 70 in the big picture. So I like it above 17, even if it broke below the IPO low. I'll personally keep holding it at one stock that's given a little bit of room. The surprising winner. I don't think any one of us thought that of NIO, XPEV, and Lee, you know, we'd see Lee be the one that really kind of held up. You know, I think Lee has been the most impressive one recently, though. Where this is wave one and wave two. This is another wave one and another wave two. So above 15, a little wider would be 14. Lee's the only Chinese EV stock that gives a low with any room to trade against. I think this is wave one and wave two for Lee. And I almost couldn't believe how close we got to that. We came within less than $1 of that low. But anyway, from this low, I think this is another wave one and another wave two for Lee. It can go on a wave three up to 50 in the big picture. So I like it above 14 and 15. I'm managing downside risk with the straddles I have on ICLN. I'm going to hold these for a while. So we'll see. One reason I'm holding these for a while is because it's a holistic analysis, right? And you know, you can have one chart you stare at. You just stare at SPY all day. When that level goes, you sell everything. Maybe that works for some people. For me, that sounds like a, you know, not a fun way to live. I think this is wave one and wave two on an all-time chart for Netease, right? So this happened in 2002, right? Again, I think China was one of those sectors that actually did really good in the 2000s, right? So when people talk about how bad the 2000s were, they're really just talking about people who weren't diversified at all, right? If you weren't diversified at all, you only own SPY and the Qs, then yeah, the 2000s weren't very fun. If you had just the most minimal amount of diversification, you own China, you own some mining stocks, you own some energy stocks, you had a great 2000s holding assets. And I think Netease was one of them. Wave one and wave two for Netease, and then from this low, right? And just again, this is the 19-year, 20-year wave one. Right? From what, 2002, you know, to 2017. Nearly 2 decades, a decade and a half, wave one. So you see why it's kind of silly to look at like the daily news stories. You know, we're not making a vine here. This is wave one and wave two. I think from this low, this is another wave one and another wave two at the 61.8 to 78.6% fib. 57 would be extremely wide. 68 would be a little more reasonable. And I think this is wave one and wave two for Netease. The length of wave one, and Netease, by the way, this is the Chinese internet. This is the Chinese internet stock, probably besides Alibaba and Tencent. That the three horsemen of Chinese internet. So if Netease is going up into where I eventually think that the 230s, and in my opinion, that's only going to end this Black Wave 3 on the all-time cycle, then I basically think that the Chinese internet itself, is going to triple. But anyway, I think from this low, Netease forms a 1, 2, 3, 4, 5, big wave 1 and wave 2 at the 61.8% retracement. The length of wave 1 plays at the wave 2 low, gives a minimum wave 3 target of the 160s before a shallow wave 4 and a wave 5 higher. So I think this is with the Hong Seng, with Netease, I'm just trying to show you guys why, my analysis of NIO X7 Lee is pretty holistic. It's based on the whole, country of China. It's based on the emerging market ETF. I'm throwing that category too. And for NIO and Xpeng Lee, I think Enphase Energy, First Solar, those are big pieces of evidence too that First Solar is going to break out of that 10-year base and head to the 200s. Clean energy stocks, whether they're in China or America, would probably be good holds during that time too. Let's talk about ROKU. ROKU forms this big wave 1 subdivided into 5 waves, and I've previously said that 58, this low, was way too wide. Of course, ROKU's made it not very wide from the current levels, so I think this is a 1, 2, 3, 4, 5 waves impulse for ROKU, and this is wave 2 at the 78.6% fib. We have gone deeper than the 78.6% fib, but if we're above this wave 2 low of 58, I think this is a 1, 2, 3, 4, 5 wave 1. Now, a lot of people have just abandoned growth, right? No one would touch growth with a 10-foot pole. There were a lot of people that had a lot of Substacks and financial media newsletters about how great the growth stocks were. All their CAGRs were awesome. All this stuff. I've always been realistic about growth, that 61.8 to 78.6% retracements are common. And if you look at Netflix, you look at, even just looking at Netflix and Amazon now, but if you look at Netflix and Amazon and Bitcoin and Nvidia, right? All these stocks that we always say, oh, I wish I could own the next Nvidia. I wish I could own the next Bitcoin. I wish I could own the next Amazon, the next Netflix. Seriously, go look at their charts and ask what you're really asking for, because a lot of people don't really want what they're wishing for. This is common, and I think that if we look at Netflix what happens in the 2000s, if we look at Amazon, what happens in the 2000s, if we look at Bitcoin and Nvidia in the 2010s, you see about 2 or 3 of these, and what occurs from it is just as ridiculous as what I'm about to say I think ROKU is about to do. What I'm about to say I think Square Cash is about to do. What I just said I thought NIO is about to do. There are stocks that go up 1,000%. There are asset classes that do that. And I think that ARK and a lot of these kind of, stocks that were real sexy, real fun in 2020, I think that this could be the correction that, we all begged for in the 2020s. I think it's here. And I think if you look at what happens to Netflix, you look at what happens to, Amazon and most of big tech in 2008, 2009, and what I believe the wave count could play out to be is that a lot of the ARK holdings are big tech in the late 2000s, where this is wave 1, right? Oh, it's a bubble. You bought Amazon, loser, right? Because you're a bag holder at the 78.6% fib. And now we've actually gone below the 78.6% fib. But I think this is wave 1 and wave 2 for ROKU. I think this is wave 1 and wave 2 for Square Cash. I think this is wave 1 and wave 2 for Shopify. I think it's wave 1 and wave 2 for Nano Dimension. Wave 1 and wave 2 for, pick one. But if we can look at the ARK ETF itself, I think there's a lot of wave 1 and wave 2s occurring. And I think that Shopify is one of them. I think ROKU is definitely one of them. I can get these to load. But if we look at ROKU, I think this is wave 1 and wave 2. So I expect that this whole rally, the length of wave 1 placed at the wave 2 low, will get replicated in the big picture for a conservative wave 3 target above 540 before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1 placed at the wave 4 low, then I do think that there's a possible path where 0 is added to ROKU's current price for waves 1, 2, 3, 4, and 5. And it could be a possible 10x. In the long term, it could very well do what we saw Netflix do after 2011, What we saw a lot of big tech stocks do after 2008, 2009, go on that big 5 waves, 1, 2, 3, 4, 5, go below the 78.6% retracement, back order, and then wave 3 begins. And if you look at how early Roku is in its life cycle, wave 3 could make it one of those monster stocks that we now call FANG in the future. So anyway, here's ARK. ARK, a whole ETF full of stocks like Roku, goes on a wave 1 and a wave 2. It's now at the 78.6% fib of that whole rally. I think if it's above 33, that's getting a little tight even. But above 33, this is wave 1 and wave 2 for ARK. And this is a rally that lasts from 2016 to 2021, almost exactly a 5-year rally, right? So it's not always about what we're talking in the news on a day-to-day basis because, over long periods of time, they all are part of the same cycle. I think this is wave 1 and wave 2 at the 78.6% fib. 33 is pretty tight, and honestly, it's not much of an invalidation level, but I think it's a level to be above. And the reward is certainly there. If this is wave 1, then the length of wave 1 placed at the wave 2 low can, in the big picture, take ARK into the 180s for a conservative wave 3 target. Usually wave 3 is bigger than the length of wave 1 placed at the wave 2 low, followed by a shallow wave 4 and a wave 5 higher. So if wave 4 retests the wave 1 high and wave 5 is the length of wave 1 placed at the wave 4 low, we just talked about the idea in the big picture. Adding a 0 to NIO's current price, adding a 0 to Roku's current price. I think ARK is almost an ETF where it's not necessarily adding a 0, but it's getting pretty close to that, where this is wave 1 and wave 2. If wave 3 goes past the length of wave 1 placed at the wave 2 low, and we have a shallow wave 4 that retests the wave 1 high, and wave 5 is the length of wave 1 placed at the wave 4 low, I think in the big picture, ARK can head up to 300. And I think that we'd see stocks like Roku, PayPal, and Square Cash during that time do a lot better than that from a percentage basis. So here's Square Cash. I think it's a very kind of similar look where this is a wave 1 and a wave 2. I think this might be a more meaningful validation level, but again, it's pretty damn wide of 32. I think from this low, Square forms a wave 1 and a wave 2. It's now at exactly the 78.6% fib. The length of wave 1 placed at the wave 2 low says a conservative wave 3 target in the future could be 333 before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1 placed at the wave 4 low, then Square Cash, luckily, we're not adding a 0 to it. But I think in the big picture, Square could go to the 540s. And that is obviously way higher than its current price. But in my opinion, the red wave 3 would end at 333 conservatively. We have a shallow wave 4 that retests the wave 1 high. And then wave 5 is the length of wave 1 placed at the wave 4 low. I think ultimately Square getting up to the 540s, while it sounds crazy now, that could just be where this black wave 3 ends. And Square is kind of all-time chart. Wave 1, wave 2. And then all the way up at the 540s is where this black wave 3 would end. So I think Square and a lot of the ARK holdings are sending a similar message where there's not many great levels to trade against at all. For a lot of the downside risk, the only practical way to manage it is with position sizing, with some type of option strategy probably. But I do think that as far as the reward goes, it's still pretty substantial. For Shopify, 1, 2, 3, 4, 5, big wave 1. Now we're at the 78.6% fib. A pretty, very similar. We're not even going to talk about Facebook and Snapchat in this video, or at least I wasn't planning on it. But this is wave 1 and wave 2 at the 78.6% fib of a wave 1, wave 2. So the length of wave 1 placed at the wave 2 low can take Shopify up to the 2000s before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1 placed at the wave 4 low, then Shopify is one where, in the big picture, a 0 could be added to the current price. There are stocks that 10x. There are stocks that 8x. There are stocks that whatever x. And I think that when we look at the idea that the emerging markets could go up to the 80s, that the DAX could go up to the 50s, that the Nasdaq itself maybe, could go up into the 500s that, you know, stocks in the ARK sector, like Square Cash, like Shopify, could really be outperforming that. So let's talk about crypto. I want to make sure I have all my charts loaded. Bitcoin got extremely close to this low right here of 28.9K. I think for Bitcoin, it just has to be viewed with Ethereum. So we'll actually talk about what the bears think about Bitcoin too, interestingly. But let's just talk about Bitcoin itself. I think from this low, this is a wave one and a wave two. I hate to be that guy, right? But Bitcoin's up about 300, 400% from, you know, when I tweeted about it in all caps. And what was I tweeting about in all caps? That this was a wave one and a wave two, right? And this was that. Do you really think that people thought that was, you know, my price target was 22,000, by the way. We're above that, but I said this is wave one and wave two, so Bitcoin's about to explode in all caps for wave three, right? And the reason that I remind that that happened with Tesla, that happened with Bitcoin, is because it's a pretty similar message and a pretty similar wave count to what we just went over with Square Cash and Shopify and Neo and a lot of the, you know, First Solar. It's a pretty similar idea. Hey, that's wave one, wave two. So wave three is going to be that big wave that everyone thinks is impossible, and, you know, they're looking for more downside. That was exactly what this setup is. Wave one, wave two, up. Wave three explodes. I think that this is all wave one and wave two. Now, I can't say this enough. If Bitcoin breaks below 28.9K, but I still have Ethereum validating its view, which is basically the same view, then I really need to see both of them, you know, kind of do the same thing. But let's just talk about Ethereum and Bitcoin together. I think for Bitcoin, this is a wave one and a wave two. From this low, we form another wave one and another wave two. Now, if we get below 28.9K, which we're pretty damn close to doing, then this is not a wave one and a wave two that form from this low. And just to be frank, if Bitcoin goes below 28K, it could get pretty volatile. And, you know, I'd hate for a 300, 400% return from 11K to get erased. So for Bitcoin, just Bitcoin, you know, I wouldn't want to see too much below 28K personally. But I do think Bitcoin has to be viewed with Ethereum. And when we look at Ethereum hasn't really gotten too close to breaking either of these lows. Ethereum still looks pretty good. I think from this low, this is the same wave one and wave two that I'm looking for. So I want to see Bitcoin above 28K. But as far as Bitcoin having a high beta goes, that's basically throwing a rock that Bitcoin could hit that. So I think it's really important to also have Ethereum above 1,700 as a additional level. So that's what I'm going to do. If Ethereum's above 1,700, I'm looking for this to be wave one and wave two. And then in either view where that holds, the length of wave one placed at the wave two low gives a conservative wave three target of 5.2K before a shallow wave four and a wave five higher. So remember that wave three usually goes to the 161.8% extension of wave one. It's followed by a shallow wave four that retests the wave one high. And then wave five is the length of wave one placed at the wave four low. So if all that occurs, I think Ethereum is going to hold above 1,700. I think this is wave one and wave two. The length of wave one placed at the wave two low can take Ethereum up to 5.2K, 5.3K for what I believe will be a conservative wave three target. I think actually, if this played out, that Ethereum would go a lot further than 5.3K for wave three. Have a wave four that retests the wave one high. Then wave five would be the length of wave one placed at the wave four low. I still think there's a path that takes Ethereum up to 8,000 above 1,700. Now, I want to give another level with Solana. This is a pretty similar view that I have with Cardano, where they're both basically at the 61.8 to 78.6% fib. So I think this is another one that Bitcoin bulls have to be looking at, right? They can't just say, oh, no, Bitcoin's the king, right? All the other ish coins are, no, I don't think that's a good idea. I think that all the crypto coins at least have to be analyzed together. And I think Solana and Ethereum, Ethereum above 17K is a great level for Bitcoin. I think Solana is a wave one and a wave two. And we're at the 61.8 to 78.6% fib right now. So the 78.6% fib of 55 for Solana's high beta is pretty tight, but it's there. I mean, the setup is here where this is a 78.6% retracement of a wave one. A wave one that is about as clear as it gets. 1, 2, 3, 4, 5 waves. Now, I can't tell my broker that Solana is subdivided into 5 waves, but it's subdivided into 5 waves. That's wave 1. This is wave 2 of the 61.8 to 78.6% retracement. This is where the laser eyes can come out in crypto. This is where there can be a little bit of devil in those laser eyes. All right, that's the 61.8 to 78.6% fib of wave 1. So what's that mean? That means wave 3 is at least the length of wave 1 placed at the wave 2 low. That can take Solana up to the 320s for a conservative wave 3 target before shallow wave 4, the retest of wave 1 high. Then wave 5 is the length of wave 1 placed at the wave 4 low. I'm not saying Solana's going to 517. But if it's above 55, the risk reward is there. The risk reward is there for Solana. The risk reward is there for Ethereum. So I think that those two charts have to be viewed with Bitcoin, where it could be a very similar idea. This is wave 1 and wave 2, and Bitcoin gets ready to explode for wave 3 of wave 3 with Bitcoin, Ethereum, and Solana obviously all moving together. So that's, my answer. I think that Bitcoin, I want to see it above 28K, but for me personally, I want to see Ethereum above 1,700 more, and I want to see Solana above 55 for that downside risk. And I think that both of them are giving a lot of evidence that this could be wave 1 and wave 2. We're getting ready for Bitcoin to make a new all-time high with wave 3. 28K is just simply too tight. So I think 1,700 needs to be an additional level. I think Solana above 55 is a great level as well, and I think that we're about to find out what happens when you just stare at Bitcoin. I think we're about to find out what happens when you just stare at SPY.